A quick look at European banking on Friday morning, and you can see the sharp sell-off of stocks as panic sprees from Thursday's worrying news from the US ripple across the continent. Reports of SVB Financial, a tech-focused lender, taking a major dive on the stock market and announcing a capital raise to offset losses has seen Europe's banking industry undergo a major drop in their stocks. Currently, the Euro Stoxx Banks Index is on track for its worst performance since June, with Deutsche Bank suffering the greatest fall at 8%, with ING Group, HSBC and Commerzbank all following close behind with a 5% decrease in stock levels. At the heart of this crippling financial news is Silicon Valley Bank. Tech and life sciences companies in the US rely heavily on the 40-year-old company for operating loans and cash flow. However, the shock news on Thursday left the lender in a state of emergency, with the huge loss of all of its $21 billion in securities, resulting in a hefty loss of $1.8 billion in total. The company's emergency effort to raise $2.25 billion has been backed by venture firm General Atlantic. However, this does not stave away from the risks of the situation, particularly in the way of interconnected banking. Interest rates are on the rise, and as a result, many institutions may be sat on huge and unrealized losses on their fixed income holdings. The effects of SVB's situation could go much deeper and be more destructive than the market fears. Billionaire investor, Bill Ackman, expressed concern over the potential downfall of the lender and how this could take away an important driving force in the economy. A dilutive bailout being a potential solution. AJ Bell's head of investment, Russ Mould, expressed his opinion on the difficult situation, noting that it wasn't an outright surprise, pointing to a drying out in the market in terms of appetite for lenders. Friday morning was definitely a wake-up call for the European banking industry, a shocking turn of events that could potentially lead to a cascade of further losses and show us how difficult it is to compartmentalize such events. Our country's banks need to take note, be more aware and answerable of what could potentially be on the horizon, losses that they could be sitting on in the form of their bond portfolio and the scale of their fixed income holdings.